Welcome to the future of money. Come with us on this journey into the world of Bitcoin, blockchain and crypto projects. You're going to meet the trailblazers. These people have changed my life and they may very well do the same for you. Hey Hardforkers, welcome back. I hope you're all doing well, investing wisely, trading successfully. We're doing our best to educate you on the space, both from a fundamental and technical point of view. Now, on that note, I know our trading shows are very popular, so we've bolstered the team here. We've got a fantastic guy called Baloo, somebody that we followed for a while and rate very highly. We're going to be doing a live show together. That's coming up in a couple of days. So this video is really taking the opportunity to introduce you to him, his style of trading, let you know where you can follow him on the daily as well. He's got his own channel. So yeah, let's jump right into it. Welcome along, Baloo.
Thanks for having me. I go by Blue the Bear. I've been in the crypto space since 2015, kind of fell into it and, got in at the previous market cycle as things were heating up. And as things started to cool off and head to the downside, I found it very pertinent to learn how to trade and learn kind of, the more intricate market moves. And I fell upon this method called the Wyckoff Method. And the Wyckoff Method really focuses on kind of the large institutional investors, or, commonly referred to in this space as the whale, and how you can actually track what it is that they're doing and what it is that they're looking at. And you can see it in the charts, you can see it in the price action and you can see it in the volume. So when you're trading with the whale, they're usually the winners at this game. So, it's a pretty powerful method that has really helped me in my investment and trading career.
So in other words, we're going to teach the audience how to follow the smart money effectively.
Basically, yeah. I could dive right into it if you want me to do a screen share. All right, so I'll first introduce you to the man himself, Mr. Richard D Wyckoff. He was an old stock operator back in the original stock market boom in the early 1920s. He figured out this method to kind of track the institutional interests and trade alongside them cycle through cycle. And I really like this quote by him. All the fluctuations in the market and in all the various stocks should be studied as if they were the results of one man's operations. Let's call him the composite man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it. And, it's often a large criticism inside of this ecosystem where we talk about market manipulation. It is a small market. It is manipulated. But what's nice is if you kind of learn a little bit about what smart money is doing, you can be on the receiving end of that manipulation as opposed to trying to fight against it. So, the basic theory is, they've really simplified the motion of a market cycle. You have your downtrend into your bear market, leaving the bear market into your markup phase into your topping event, and then the cycle repeats itself. So typically this is the area known as accumulation, where a lot of crypto's dead. Everybody's telling you you've lost all your money on your investments. It's never going back up. Crypto was a fun experiment and it's done. This is the depths of the bear market where nobody cares anymore. This is the area where you want to start accumulating. And then you have the markup event. Effectively, what occurs in these accumulation areas is the smart money accumulates large quantities of the token supply, effectively locking it up. You can almost think of it as a token burn. We kind of have these people playing, pulling on the levers of tokenomics. When the strong institutional interests don't sell their tokens, it's the same as a supply shock. So they lock it up and it's not available to trade. When it's not available to trade and demand starts to come in, that's what causes this markup effect, because there's a very small amount of the token supply left for the traders to basically fight over. And once the composite operator feels that he's made enough money, that's when you get into the distribution area, where the shares are being distributed, they're being sold into strength, and the market is being flooded with the supply, effectively the same as a token mint. And the buyers can no longer sustain that type of supply being flooded into the market, and you have a markdown event, getting into the bear market. Then, this is a very common structure that we see pop up on Twitter every once in a while. A lot of people like to look at this in the sense of a pattern. And it's not really a pattern. You can dissect these bottoming patterns many different ways. They do not appear the same way in the wild. So, it's more of just a sequence of events that can signal institutional participation in an asset that looks to have bottomed. And that's basically where we focus a lot of our efforts. Now, where we are in the market right now is we have kind of left a lot of these accumulation zones. So there is another form of accumulation that we study called reaccumulation. And I'm not going to touch on that today because it's an entirely different topic. But, basically, we're looking for these accumulation zones so that we can position ourselves alongside the whale and profit as the whale profits himself. One asset that I've been keeping my eyes on that nobody's talking about, and that's your first kind of clue, the demand hasn't really taken over, is actually Dash. So not a lot of people talking about Dash. It's fundamentally a solid project, and we can see this kind of bottoming pattern. I'll actually just simplify it here. We have a markdown event, we have a bottoming pattern, and we're beginning to curl up. So this curling up is basically where you want to start paying attention. And there are some signals that you can look at inside of the trading range that can help you determine where's a good time for you to enter. Where is the point at which the accumulation is complete, the composite operator or the whale is no longer selling and they're no longer buying. They've got their position, and we're just waiting for the demand to kind of take over and we can head into markup. So this is one that I've been looking at. This area right here, as we sit on top of this channel, is called the backup phase. And the backup phase is basically the final test of the supply at that level. We want to basically hold that level and prove to the market that supply and demand is basically equal at this level as we leave the box. So as far as a buy entry, you could buy on top of the box, although it's a little bit risky. I usually try to buy a break of the consolidation that's sitting on top of the box. So often what I'll do is just kind of drop a line and maybe put an alarm on it and just allow the alarm to let me know that the asset is moving and it's time to take a position in that. I do hold a little bit. I've been scaling into Dash, but that final confirmation above $300, where we break out above $300, is what I'm most interested in finding right now. That's not really a topic that a lot of people are going to be comfortable with, honestly, because we trade on confirmations. The change of trend is really high on the macro. So if we go to the daily, you should have been scaling out here when we had a little bit of a, oops, got my pen action going here. Let me just erase those dots. When we started getting the bearish divergences, you should have started, trimming the fat a little bit. But basically, if we start breaking below this level of support here, right at around 42 to kind of 38, worst case scenario, I do think that Bitcoin does actually still hold the right to come down to even 28 to 30 and still turn around. Now that would be very ugly. That would be not comfortable for a lot of people, but I do maintain that Bitcoin has the right to do that and still remain bullish. Historically speaking, Bitcoin does these 40 to 50% retracement. So bringing us down there would be, well, it would be over 50%, but right in that kind of neighborhood. So if we did a 40% retracement, we're kind of up at this support level that I have marked here. And this kind of falls back on just the fact that when you buy in these accumulation zones, you're buying Bitcoin down in this area here. So if you are, I realize that a lot of people are new to the market and they're entering at higher levels, some of which just bought the peak, but the reality is you want to buy when nobody's buying, and that's these market cycle lows. So true confirmation comes at levels that they're uncomfortable with. And if you're uncomfortable with it, then you have to kind of reassess what it is that you want to do as far as a strategy. And that kind of can be difficult because it's very easy to be shaken out in these events. They're called shakeouts for a reason. They're designed to shake you out of the market so that you have to buy in higher. We have not had a test of the 21 week.
There's got to be buyers and sellers in any market, doesn't there? And we've just had buyers for a long time now. So for me, I see this as a shakeout. I don't think the fundamentals of what Bitcoin is bringing to us globally have changed in the slightest. I actually think they've got stronger. So
I agree with that as well. My conviction that this bull market isn't over is actually two things. First of all, I don't feel these market cycles, there's a mania phase. There is a point at which everybody jumps in and they don't know what they're buying. And although we had a really hot and frothy market up here, it's not reminiscent of that kind of mania phase. So that's point number one, and that's kind of anecdotal. That's an anecdotal form of analysis. But then the other fundamental factor is, follow what the smart money is doing. We have a huge advantage inside of blockchain by being able to do a lot of on-chain analysis. Take a look at the large addresses. What are the large addresses doing? The large institutional players inside of this ecosystem, they're buying the dips and they're removing it from the exchange. And it's those two things. They're buying the dips, they're stepping in to be a buyer, and then they're removing that liquidity from the exchange that is further exacerbating the supply crisis that a lot of these centralized exchanges are beginning to feel. Binance is offering all these huge staking rewards. Why do you think they're offering staking rewards? Because they're running out of the token. It's staking. Right. They're running out of the token because we're in a liquidity crisis, and this is fundamentally bullish for me. So I'm not convinced that we're done yet. We're in a localized downtrend though.
What other sort of tools do you employ? I've watched a number of your videos. I think you've done some fantastic analysis on the use of leverage and futures. And obviously today we have had the news from the CME that they are launching micro futures on the 3rd of May. So can you maybe tell us a little bit about how you deploy these other instruments and a bit more about your style?
Yeah, so I'm a macro trader. I play the large swings, and what comes along with that is large swings up and down. So whenever I employ leverage, it's typically going to be low leverage. If I'm playing to the long side on a contract, we're looking at 2 or 3x. But what I more so enjoy using futures contracts for is 1x shorts, as opposed to taking profits. I will trim profits, if I'm trying to build a cash position for a dip. But what I like about a 1x future is basically it just locks in the price. So, you can set it, if it looks like, you got some bearish divergence on the high time frames and it looks like it's failing to kind of thrust up to higher levels, instead of committing to the downside, which is what you're doing if you start a portion of the position, is you basically can lock in certain prices against your main portfolio. So, I have my spot holdings. I primarily hold spot, but you can introduce some of these exotics like these futures contracts to kind of act as a hedge against some of those positions. I really like to look at my portfolio as a whole, and the newer investor, they pretty much, a lot of the times they think all or nothing. It's like, where do I buy? Where do I sell? And I find it a lot more constructive to just treat your portfolio as a whole, where you have a little bit of cash, you have a little bit of Bitcoin, you have a little bit of futures contracts, and you have some altcoins. And the way that you structure your portfolio will either be structured in a bullish way, in a bearish way, or in a neutral way. And that's kind of the way that I approach this market. And employing those futures and sometimes options contracts are a good way for you to get those forces that will neutralize your portfolio.
Excellent. Now, those of you that have been following this channel for a number of years now know that the bulk of my content has been fundamental analysis. So it's a real pleasure to have Baloo join us to look at the TA, the technical analysis of the charts. To what degree do you employ fundamental analysis? Are you purely a chartist? Can you tell us a little bit about that?
Well, it's actually kind of an interesting question, because when I was in the depths of the bear market, I was very much so purely technical. But what I've noticed is, when you're in the depths of the bear market, the crap projects are gone. Like, they die and they don't have any activity. So any institutional participation that you see in the charts were kind of fundamentally solid projects. We're in the stage of the market now where there's a lot of garbage. So I've really started to kind of dive into the fundamentals a little bit more. I always start with the chart. I start with the technicals. When I see something that's interesting on the chart, now I have a reason to go and dive into the fundamentals. I'm not just reading white papers trying to find what is, fundamentally a sound project. I need to see that the market is interested in it first, and then I'll kind of back that up with some fundamentals. White papers, apps that actually work, get hands-on with their products, stuff like that.
Yep, excellent. And last question. Obviously, we've got quite sort of distinct sectors within the blockchain space. Obviously, I view Bitcoin very much as effectively a category winner. I don't consider it having a competitor for what it does. We're seeing some quite interesting price action, especially with Bitcoin and Ethereum at the moment, that almost are moving in quite different directions, which for me is fantastic news. To me, it shows we've got a market that is starting to mature. Obviously, in the future, I expect that we'll see quite distinct sectors with DeFi, with the NFT space, with Bitcoin. I don't think we're quite there yet. We're obviously, when we see Bitcoin move, typically it's moving an entire market. Could you maybe comment on that? Do you have any thoughts on where the evolution of the overall sort of blockchain space currently is, and when you think we might start to see things moving a little more independently?
Yeah, I mean, we're not out of the woods yet. Bitcoin still, if Bitcoin takes a large move down, the rest of the market usually does follow. But you're right. What we're seeing in the market as of late, we've seen some shakiness in Bitcoin recently, but the bounce back in the altcoin space has been impressive. And this is the first time in this cycle that we're really seeing a lot of strength and a lot of the alts are really starting to pull ahead. So, we'll have to see how that kind of pans out when we're transitioning down into a downtrend, and maybe we get further performance in other sectors. But yeah, the DeFi sector has been kind of a beast of its own. It was the first sector to really gain a lot of attention this cycle. And it seems to kind of there's a lot of assets within that kind of category that seem to be leading the market. So we're trying to revolutionize the world of finance. Wall Street doesn't know it yet, but we're coming after them. So it's going to be interesting to see how this kind of correlation or decorrelation or decoupling unfolds. That's a chart that I'm very excited to kind of share on the channel, is the Ethereum Bitcoin chart. These 3 points, the seller's climax, automatic reaction, and secondary test, they kind of set the width of the trading range.
Yep.
You can see the width is kind of set there. And then we're in the oversold condition. And then we entered this really bullish accumulation ascending formation, which is a megaphone pattern. This is kind of popularized by a stock operator by the name of Jesse Livermore. He kind of popularized this, it's a broadening ascending wedge.
Yeah.
And this is throughout the accumulation from the bottom of the oversold condition, all while the rallies come on high demand, and then they test on low volume. High demand, test on low volume, high demand, test on low volume, high demand, test on low volume. And now we're moving up with an ease of movement through the local high here at the initial break of this box. So this is kind of our SOS, our sign of strength breakout. And then we retraced back down to the 21-week moving average, or I guess, no, this is on the 3-day. Anyways, we rested on this moving average, which is the 150 period moving average on the 3-day, just tested it beautifully and started really rallying, like really healthy, strong, confident price action, breaking out of this megaphone here. So what I'm looking for is basically us to really start heating up in Ethereum and get a move up to about 0.05 BTC per Ethereum, and then retest the top of the megaphone. And if we can hold that test, my target is up at 0.08 BTC per Ethereum. And given, we don't know where Bitcoin's going to be at that time, but it could be, if Bitcoin's up at 100K, I mean, it'll be $8,000 per Ethereum. If it's at its current price, then we're looking at, $35,000 to $4,000 Ethereum. But I think that if it is to rally, Bitcoin needs to be strong. So it'll probably be at a higher level.
Right.
Really, really bullish on this chart. This is just a perfect bottoming pattern. And it's kind of an inverse head and shoulders as well, which is one of the 3 patterns to look for in a bottoming structure. Yeah.
Cool. Excellent. Okay. Nice one. Well, we'll pick it up in a couple of days live.
Sounds good.